Hello again, everyone. Welcome back. In this technical analysis of the stock market video, we're going to take a look at the Dow Industrials today, one of my key indicators I like to look at every day. And then for the Magnificent Seven stocks that are in the Dow Industrials, and we're gonna look at, did we get an intermediate bottom yesterday, Friday? Kind of looks, I think the odds favor the probability that we got a little washout bottom this last week. So let's take a look and see. So we're going to start off here with the monthly view, and then we'll take a look at the weekly view, the industrials, the S&P 500, NASDAQ 100. On the monthly view, the Dow was down 704 points. You can see it was a little inside candle, but down 704. The S&P 500 was down 86. Little doji type candle in here, kind of a pause type look to it. And then the NASDAQ 100 was down 594 points. Now, let's switch, and I'm going to put the weekly candles up here. Let me just click on the weekly view right here, right here. Okay, so for this last week, the Dow was the only one of the major indices I look at on a regular basis that was positive. And it was up 413 points in here. Back above the 10-week moving average. The S&P 500 was down 58.63, and the NASDAQ 100 was a lot more negative than the other two in terms of the look. You can see it closed below the trading of the last 5 weeks, down 730 points. All right, let's go back and take a look at the Dow Industrials. Let's drill in and look at the daily and the weekly. I'll show the side-by-side of the daily and the weekly. So you can see the candle that happened on Friday, pretty bullish looking type candle, almost looks like a reversal. It's not a complete engulfing and from the standpoint of engulfing the entire range of Thursday's trading, but up 601 points. And when you look at the what I call the hourly chart, the 65-minute chart that I use right here, you can see how strong the afternoon was, these last 2 hours of the day, last 2 bars. Just the opposite of what happened on Thursday afternoon. Here's the last 2 candles of Thursday, and then here's the last 2 on Friday. And look where this closed. This is literally the highest close of all. You have to go all the way back into a week ago. This is Friday, February 21st, the first hour of the day. So it literally closed at the highest hourly reading of the week, slightly above that second candle of the day a week ago. So pretty strong finish in here on the Dow Industrials. We'll see what kind of follow through we get. So when I look at the Elliott wave picture that we've got, here's what I've got in terms of the Elliott wave picture. I think that we are in a 5th minute wave up. Let me go to the weekly chart so you can see the bigger picture of what I'm talking about. I think we're in the 3rd minor wave of the 3rd intermediate wave. And within that 3rd minor wave, we're trying to finish off a 5-wave sequence. And I think we're in a 5th wave. And I think within that 5th wave, that here's what's going on. And we had a strong first move up with a high on January 31st. And then we've had the pullback here through February. And I think there's a pretty good chance that we just put in a bottom on Friday and are reversing back to the upside. We'll see if we get the follow through in here. Look at the retracement of 2 versus 1. The low was almost exactly to 61.8%. And you know, when you're looking at a second wave, many times I look at this zone as a beautiful little reversal target zone to be watching for a reversal to occur. No guarantees, but it's always something to be looking for, and it may have very well just happened on Friday. Okay, I'm going to go back here to the moving average view. This is what I call my moving average view. And I think I can just, well, let me just leave it like this for now. Let's pull up the high yield bond fund. because this is an indicator I look at a lot. Okay, so look at what this is showing. Okay, on Friday, up 22 cents. But the whole point is the high yield bond fund is kind of a risk on, risk off type of measure. Okay, because you move into high yield instruments when your animal spirits are stronger. It's kind of a risk on type mode. But look what's been happening in here. It's kind of interesting that the entire month of February, this has been rising, and then we kind of broke out of this trend line here on the 25th. We kind of sat there, but when you get the market going in the opposite direction, you're thinking, what's going on with this indicator? And so now I'm really thinking, here's the weekly view here. You can see it looks a little more substantial. It's the highest close on a weekly view since September 21st, the week of September 21st. So it's really sending a kind of a strong message in here that I think this market may very well be ready to take another leg to the upside. We will see. All right, I'm going to take a look at the four Magnificent Seven stocks. Let me just go back down here that are in the Dow Industrials. And the four that are in there are Apple, Amazon, Microsoft, and NVIDIA. So I'm going to pull up Apple. Okay, so the really interesting thing that happened with Apple is look at this potentially reversible reverse candle that occurred on Friday. And I say potentially because, yeah, it engulfed the prior body on Thursday, but it didn't close above the Thursday high, which would have been even more bullish. But look at the big tail, and it's just a big bullish looking type candle. But look where it came down, the low. The low on here on Friday was 230.20. What I did was I looked at this cluster of trading over here from February 3rd to February 11th. There's 7 days. And I said, okay, what's the average of the closes of these 7 days? The average is 230.63. Where did it come down to on Friday? 230.20. So it looks to me like, at least as of right now, Apple just got some pretty strong support in here and is ready to head north. Let's take a look at Amazon and see what's up with it. Now this has come down very close to the 144-day moving average. I've got three simple moving averages that I have on here. The 21, the 55, and the 144. And then I've got a kind of a trigger fast line 10 exponential moving average. So it's interesting that many times the 144-day will provide support, but there's no guarantees. But it's kind of comparable. A lot of people look at the 150-day moving average, but I like to use the Fibonacci numbers. So anyway, that's what we're using. So the interesting thing here is this is the most oversold that Amazon's gotten since August. That washout that occurred at the beginning of August when all that happened with the Japanese yen. Okay, so kind of interesting. So potential in here, although we don't really see a good reversal just yet in Amazon. Let's take a look at Microsoft. Okay, so here's what's going on with Microsoft. Look where it came down to on Friday. This support area. It's really, really interesting that the low that occurred in April of last year, the two big lows of 24, April and August. So the low here, 388.03, the low in August, 385.58, and the low on Friday, 386.58, came right into that zone in here. So again, not a significant reversal candle just yet, potentially. And, yeah, we have gotten a little bit oversold down here on the RSI. Not as bad as we got in terms of, or not as strong, I guess I should say, as what we got in August, but we're still there. So this bears watching for a key reversal. Let's take a look at NVIDIA. Okay, I'm going to pull up NVIDIA. Now, the interesting thing about NVIDIA is it is really chopping around now or below the 144 day. So this stock looks like it's struggling. And of course, we had the breakdown. It had earnings out. Here's Wednesday. Here, right here. Let me zoom in. Here's Wednesday. Here's Thursday. So after the earnings came out, the following day, they gapped up at the open, went nowhere except south all day long. And then Friday, a little bit of a comeback, trying to get their feet underneath them. But, it seems to be chopping around this 144 day. Now, what's interesting with NVIDIA is you can see over the last couple of years, the 144 day seems to have been a catch for the price action. Okay. But then if you go all the way back over here to the beginning of 22, where it started struggling, and then not so much, then it got a lot weaker. So it's to be seen what develops in here. Can it get its feet underneath it and push back up and kind of take out these highs? And I guess you could almost draw a trend line across these highs right here. If we see a significant break of this trend line to the upside, then yeah, it's getting ready to push another leg up. We'll see. Okay, that's where we sit for this weekend. If you felt like the video was helpful, give it a thumbs up. If you're not a subscriber to the channel, hit that little subscriber button. And if you'd like more of this information on a regular basis, head on over to joehenches.net. Everyone have a great week. We'll talk to you in the next video.